Hello guys, hope I am on time. So I didn't announce this earlier, but it's okay because almost all the people who are following me, guys, I'm always here at 10 o'clock or 10:05 or whatever each Sunday. Now, today we try to see another subject as always. Hey Bobby Six Killer, how are you? So the subject of today is: are you scared to trade? Now, this idea that I'm speaking about is related to psychology. I understand there are some people who have talked about this because it affects your trades, and some people, when they trade, they are always scared. Okay, so but sometimes you get this feeling when you do crazy trade. Okay, for example, let's say there is a earning news for some stocks that always they have a gap up, they have a gap down, and you just go before the earning and then you buy some shares, now hoping that there is a gap up in the morning. It means in the afternoon, for example, the market closed at 4 o'clock, because it is announced that after the market's close, the company will announce the EPS, which is earning per share, and we compare it to the earnings, and then we see. Now, some people, when they buy, let's say they have the market is against them. Okay, even before the market doesn't show the gap up or gap down, it means let's say at 5 o'clock, 6 o'clock, 7 o'clock, you can check that after hours trading. You can check if the news is good or bad, doesn't matter, but you see your stock. Do we have a gap up, you make money, or you have a gap down? Just when you buy and you push yourself to buy, this is a kind of pressure, psychological pressure that you endure. But is this pressure for every trader, or is it for some people, like some traders? Now I'm telling you the truth. Holding a position around earnings is a very stressful thing, either for big traders or small traders or the beginners or advanced students, because this you understand beforehand, and this is what I teach all my like friends or students, is that you don't know the outcome when you buy, and it is in a very short time. So you get scared because of this. You don't know what will happen. So you say to yourself, what if the stock plump in, okay, or sink or go down? How much money can I lose? Okay. Hello Nasa. Hello Herman Man. Okay. You say how much I lose, but most of the time, people, before they buy, they are thinking otherwise. Because when you go and you see your money, and then you see that there is the earnings. You know that there is earnings. Either you check the news, or they told you, or you are following this stock, and you know the earning news is, for example, today. But what makes you buy in this situation? Sometimes you have this stock for 1 month or two, okay, and let's say you make money. So is it reasonable to hold more for more profits, or is it good to sell and to wait for the news? Now, all these depend on you. It doesn't depend on the market, because the market is the outcome of traders and what they do. So it's neutral. The market is not against you, or it is with you, or it has some problems with you, as some people think. It has nothing to do with you. It's you who bought the stock at this earnings. Is it you or someone else? It is you. The market doesn't come to you or knock at the door or send you an email or a text message or Facebook message, or they tweet you and they ask you to buy because there is profits waiting for you. There is no one who is doing that. It's you. Now, before you buy, you hope to make money. Everybody, investors, day traders, swing traders, position traders, scalpers, everybody, when you buy a stock, you hope that the market will be with you. It means you are going to make money. That's why we buy stocks. Okay? Thinking that you make money. If you know beforehand that you are losing money, why you buy the stock? So there is no reason for that. Okay? So understand that before you buy, your psychology is good, because you are hopeful that the market will be with you, not against you. Okay? In terms of money, you expect a gap up. You put $10,000, you expect 1,000, 2,000, 3,000. Sometimes the stock doubled. Okay? Sometimes you get excellent. I have seen this year gap ups that it is 400%, 500, 700, 1,000. You can see more or less depending on the stock, and depending on the news, depending on the price of the stock, depending on many things. But the outcome is so good that the people want to be in. That's why the people, they buy stocks either before the earnings, or they have the stock like us, like swing trading. We have the stock and we don't sell. Okay? Now, sometimes when you buy the stock, hoping that the market will be with you, and then when you buy, you begin to regret that maybe you bought too much of this stock. This has to do with greed. I mean, I'm not saying greed that you are greedy to make money. Everybody is greedy to make money, but the problem is that you don't calculate the outcome that you don't know. But in terms of trading, you understand that you can have a gap up or you have a gap down. So you know that there is a possibility that you lose money. So expecting 10% or 20% up or down. Okay? Sometimes for me, when there are earnings, Facebook or Apple or Tesla or Zoom or other big stocks, I will just say, okay, it can go 10%, 20%. But sometimes, like I think in 2018, Facebook and Apple, they go too much down because of the earnings. Now, when you see, it was a very, very large trend, but the news was so bad for Apple and Facebook. Okay? So, even though you expect something, either a gap up or gap down, understand that you have an idea on how much you can make or you can lose, but this thing is not exact. You will never know exactly how much until in the morning and you see yourself. Hello, Artkov. So, when you buy stock, I told you, before you buy a stock, before the earnings, for example, I just give you earnings because you know the news. You know that there is a news about the company announcement of the EPS. You know, and you can check, for example, the analyst, what they say, how much the EPS is according to them. You will see it, and in many websites, you can go to Nasdaq.com. You can go to a lot of stocks that they give this information. Okay. So before you buy, you are hopeful to buy. You are hopeful to make money. Now, when you buy too much or your position is big, you are scared. And then you realize that you have done maybe a mistake. You say, what if I lose 10%, 20%, 30%? What if? Now, this what if you should think about before you buy the stock. Or if you have already bought the stock for 1 month or 2, you should have thought about this before you buy, not after you buy. Hello, Fabian. Okay? So this is just to tell you that you are scared because you did a mistake. And this mistake can cost you a lot. Some people, they don't realize that buying a stock, let's say you buy too much of a stock, whatever your money is, and you emphasize on the stock. Emphasize, it means, let's say you have $10,000. $10,000. I mean those people who are always influenced by analysts. Okay, I see some who I have taught, but they have still this problem. And they believe what the analysts say. Now I'm in the way that he or she begins to talk about fundamentals before the earnings. Oh, this company has done, this company, it has a big sale, it has this, it has invented this, it has made this, it will, and it will, and it will. But they told him the earnings has nothing to do with the fundamentals. It's just the news. It can go up, it can go down. What you are saying, you are speaking about investing. For example, you like a company, okay? Hello, Oliver, Blair. I'm just saying this for every one of you guys. Let's say you like a company, you love it because of its products, because you bought it in the past and you make money, because but most of the time you like the company. And some of you are following the news, which is good if you are interested in the company. But this has to do with investing. If you are an investor and you see a company that it is good, the price is always going up, yes, why not? You buy it for investment. This is for 10 years, 5 years, 10 years, and like Warren Buffett said, it's for 20 years and more. Because a company should grow and make more products, and for example, a company that it is only national, and then you see your company, you have a prospectus that this company will go to other countries and make more money. So you have, okay, you have an investing idea about this company. But this is good. But this has nothing to do with trading. Understand, guys, this thing I'm explaining always. You should understand that investing is not trading. Trading is shorter in time. Okay? It's shorter in time. So, are you expecting a gap up or gap down? Are you following a trend? Are you selling short because there is a downtrend? You are selling short, or you are buying puts or whatever, or inverted ETF. It means that it is a shorter time. You should think like that. Now, techniques in trading, they are not the techniques in choosing a company for investment. It's not the same. It's not you buy a company because last quarter there is a gap up. You are not going to do that. You are not going to invest like that, because this is just news. Because after 3 months, maybe you have a gap down and you lose all your money that you have accumulated after 1 month or 2 or 3. Okay? So, try to focus always, since you are a trader. That's why I said, are you scared to trade? Here I'm speaking about trading. I'm not speaking about investing. So, guys, try to focus with me on the same thing that you are facing. When you are scared, it's just because of your actions. Sometimes you realize that, for example, I just give you an example. You have $10,000. Okay? You see a stock. Let's say you don't buy it at all. Okay? You didn't buy it. But you see the news. Oh, this company has done. This quarter, last quarter, it has sold a lot. It could, in the the 3 months, the last 3 months, the last quarter of a year, a lot of businesses, they do a lot, and people, they know that these companies are making a lot of money, and the earnings might be bigger than the other months. So they think to buy these stocks in January. They might have gap ups. This is like a strategy they do. Okay, so I'm just giving you some information about how the people think. Maybe you have done it, you as a strategy. Maybe some people they have done it. Maybe you have heard about this. Hello, Top Series. So, I said you have $10,000. You have read a lot of good news about this company, and they told you okay, they might have a gap up because this quarter is good. Now you buy $10,000. This is stock, all your money. Now, before you buy, you are happy, you are hopeful because you read too much. This gives you a big hope. Now, this big hope pushes you to buy, because you have gone and you search, and you get hypnotized by this analysis. Hypnotized, it means you accept all what they say without logical thinking. So, if you think like a logical trader, you understand that it's just a gambling thing. Earnings is just a gambling. Okay? Whatever you expect, whatever you hope, is just a gambling. Whenever you buy, you begin to feel that you are scared of this position. You are scared that you realize that maybe you are wrong. Okay? To buy all your money. You can use, for example, $1,000, $2,000 for your money, and you do a gambling trade. Okay? You do a gambling trade, so you take more risk. And you are aware that you have done a big risk. Because understand that someone we were, one time, I'm telling you guys, I was in a trade in 2018 with Facebook and Apple. I have made, I'm not saying like 70 or 80% in Apple and Facebook. You can go and check. Those who were with me in subscription, they see, because sometimes I buy the same as my trading account. So I made around 70 or 80% in Apple and Facebook because that year was bad. But whenever I see a new trend, this uptrend is like 3 months only. And Facebook and Apple, they have done good in the trend. But the problem, I stayed. Because most of the time, if I have a long position, I stay the earnings. I stayed. And then I have a gap down. I lost about 20 or 30% of my money, of my profits, not of my money, because I didn't lose money. But I know the risk, but I don't know how much the stock can go up or down. No one knows, because you will never know. Okay? And in the afternoon, I can exit, because the first, the gap down, very quick gap down, it could take seconds. I see that the two stocks have gone down to like 20%. But the other 20%, I see it. I see that the stock is continuing to go down. But I tell myself, I will not judge by the afternoon. I should wait in the next morning and see. But it was the same. It means the same. What I see at the end, tomorrow I see it the same. And I lost some of my profits. Now, when you realize that you have a loss, and then I know you are scared because you lose a lot of money, but for me, I know what I have done. I am okay with the risk. It means whatever I lose, I don't care. Because beforehand, I am with the risk, with that risk. Okay? I am with that risk. And this is so different from someone who think or hopes that this stock will have a gap up. He doesn't believe when he saw a gap down. Okay? He doesn't believe, and he doesn't want to believe what he sees or what he in the price. When there is a gap up, he lost 20% of his money, and he sees it in the morning that his stock lost 20% of his money is gone. He doesn't believe, and you say why, and the news, and the company is good. And it's no way you begin to say the company is good, because it is just news. News has nothing to do with the company. The news is just the reaction of traders to the news. It could be good, it could be bad, and you should expect the worst when you are in earnings. So that's why I give solutions to this problem. If you are always scared to go through a trade, make a position smaller. This will enable you not to be scared. Okay? Whatever you lose will be little. Okay, so let's say you have $10,000. You lost 20% in your earnings. There is a gap down. You lose 20. So how much you lose in your money? You lose $2,000. You have 10,000. And the next morning you have 8,000. Okay, so for you, 2,000 is a big money. It's 20% of your money. Try to think about someone who has 100,000. He loses 20,000 in a night. In the afternoon tomorrow, he doesn't find his 20,000. It's gone. Okay? Now, in order to not to be scared of the trade, is at least minimize your position. For example, you have 10,000. You take 1,000. You buy the stock. If you get a gap up, it's good for you. If you get a gap down, you are not going to lose too much. For example, 1,000, you lose 20%. You lose only $200. But $200 from what? From 1,000. Now, what about your 10,000? 10,000, you lose 200. So what does it mean? You lose only 2% of your money. So you see the difference between losing 2% and losing 20%? Okay? If you have bought with 10,000, you lose $2,000. You buy only $1,000, you buy those shares, you lose 20%, you lose only $200. So you see the difference. Now this is a measure to help you not to be scared of your trades. For me, for example, now, when the people are following me in the subscriptions for my trading account, I go and sometimes I have a gap down. But when you see the gap down and you see my account, it doesn't affect it that much. Whatever happens, it doesn't affect my trading account, and it's not a big hit. I'm not putting all like trading account. It's 100,000 or 200,000 with a margin. I don't put all 200,000 into a position. I would never do that. I'm not crazy guy. I'm not gambling, putting all that money into before the earning in one stock. I don't do that because I understand in terms of money management, in terms of risk, I am more gambling than trading. That's why I always tell you that you should think about gambling and trading. And this is why when you gamble, you get scared. But when you trade, you should not be scared. Okay? You should not be scared when you trade. Now, because if you are scared because you are doing these mistakes, you should stop doing these mistakes that you already know the solution. Okay? Now, are you scared now for let's say a correction or a crash in the market, as some people they say? One of the guys, I think last week or the other week, I don't know which, he wrote to me here and he said, I will be waiting after the next correction and I will buy stocks. Now, let's take his statement, because when I see his statement, I understand he is scared. Okay? Now, when you are scared and you stop trading, it's okay. because you don't want to risk your money in this period, because sometimes it is volatile period, sometimes it is like that. Basan, how are you? I know when I see your name, I know. Thank you very much for coming, Basan. Now I will answer all your questions when we finish this presentation. So, you be scared. He told me, I will not trade now because I expect a crash in the market or correction. Most of the time, correction. Now, I told him beforehand, who tells you in the market we will have a correction? Where is the logic in that? Logic. Yes, it can come. A correction can come during the whole year. Sometimes 1 year, 2 years, 3 years, there is no correction, there is no big deal. So, are you going to wait until you see correction? And if there is 1 year, 2 years, 3 years, there is no correction, there is no crash. Sometimes 2 or 3 or 5 years, they are good years. No, not a big deal. So when are you going to trade? Okay? So this is something that when you are scared, this is like a handicap. It doesn't let you trade because you are scared of your money. And there is another thing. You are scared because you don't want to lose money, and this is an obsession for you. So, hello Ashley, Neil. So, being scared is a psychological problem that you should overcome. It means you should have solutions to your psychological problems before you come to trade. Okay? Sometimes you have problems with your co-workers, or with your wife, or wife with her husband, or kids, or you have problems, and you come to trade. This is very, very dangerous thing, because you are not stable, you don't know what you are doing, sometimes because you are mad. Okay? You sell short a stock, and the next morning it goes up, you lose a lot of money, and instead of stopping trading because you lose a lot, you continue to trade too much, and you don't know what you are doing. This can happen, and all this is because you are scared. And some people, they have this idea is to get back their money from the market. As you oblige the market to give you your money, what you should do? Some people, they begin just to trade and trade and trade and trade, and sometimes you are in a volatile market. The mood of the market is not right. There is no trends up or down, clear trends. So you see, like 2018, 1 week, 2 weeks, the stock market is up. 1 week or two is down. 1 week and two is up. 1 week up, 1 week down. So in this situation, you are not following big trends. They are just very small trends. So you should adapt. You shouldn't stay that long, or you should follow the small trends, and you follow them. Okay? You should follow this thing, and you try to think that there is no big trend this year. So, according to what you know, according to your trading techniques, trading strategies, you will understand if there is a big trend or there is no. Now, another problem that beginners do, they don't realize, but they realize later. So I will give you the same example. Let's say you have $10,000. You have a margin account. They give you 10,000 with interest rate, as you know. Let's say you say to yourself, there is, for example, Apple or Facebook or any stock that it is moving a lot with the news. So you say to yourself, okay, now this time I will do crazy trade. Now what is it? You buy with your money and the margin money. It means instead of buying with $10,000, you buy with the margin money, which is not your money, and then you lose 20%. Let's say a gap down. So what will happen to your account? First, you will be scared to death because you are not going to lose 20%, although the market has gone 20% down. But you are going to lose double. You are going to lose 40% because 20% you lost it from your own money, and 20% you lost it from the broker's money. But the broker doesn't make money or doesn't lose money from the money he lends you. So you borrow the money, it's everything for you. Either you make money or you lose money. And then you end up losing 40%. This is a major thing why most of the people who are trading in the margin and they are beginners, they can wipe their account 3 months, 6 months, 1 year. They can wipe their account because they use margin money. They don't understand that you are doubling either the profits or you double the losses. Now, you use margin account when you are advanced student. At least you are intermediate. You understand the risks of using margin because this is not a game. Some people, they get into a debt. Some people, they go bankrupt. Maybe you don't. Maybe you have heard about bankruptcy. People, they show bankruptcy. Yes, because let's say you put $100,000. You have let's say a good account. You are trading very good. But you make a crazy trade. You enter to a drug company, and there are news of FDA or something like that. Just news, okay? Or let's say earnings, and then you have 100,000. You buy this company, this stock, and then the earnings, FDA, for example, did not approve their drug. What will happen to this new company? The company, let's say it is $45. What will happen to this company? Tell me. Let's say it lost 90% of the price of the stock is lost. Do you understand that from 100,000 you will get 10,000 in your account, and 90,000 is gone? You can say bye-bye to your money, and that's it. Now, when you lose all this money, what if you have margin account and you have used 100,000, so you have 200,000 in this position? Now I am saying that please don't tell me, oh no, I don't do it. No, you do it with 10,000. It's the same thing. For example, 10,000. Let's say, when they say 100,000, they say to me, oh no, you have 100,000. Why should I use the margin account? Yes, people, they have 10,000, 10 millions, and they use 10 millions of the broker. They do. Okay? But those people, they know the risk. They don't put all their money in one stock. They are not stupid. So trading is not a stupid thing. You should always think where you are putting your feet. Okay? Trading is, when I made a video before, and I said, trading is math. It's not magical. It's not magic. No, math, it means you should calculate everything before even you buy a stock. Okay? And you should see the risk. If you have a margin account, it means you are borrowing money from your broker. It's not your money. Try to see how much you lose if you are going, if for example you lose money 10%, 20%, 50% in this kind of thing. Are you going to put all your money in one stock? And this is what I teach. Never do this stupid thing. Sometimes you make a lot of money, yes. But this is like what is it? It's like someone who won the jackpot in gambling, in lottery. Yes, it happens. But how many people get the jackpot in their life? You will find the odds are millions of people they have all in their life lost their money. You find a few people in their life, that they have the jackpot. So are you going to base your business on odds like this? On gambling? Buying tickets? And some people, they say, okay, I just buy each month, like maybe I get the jackpot. Okay? This is a strategy, but understand that in 30 years, 40 years, some people, they have lost thousands and thousands and thousands of dollars. If these thousands and thousands and thousands of dollars have put in 30 years, maybe they can have millions of dollars. Maybe. But in the right way. Not in gambling. Gambling is another thing. Gambling is something, is an activity. Some are gamblers, but those are professional. They study gambling. It's not even a game. Okay? It's not just a game with the stupid. Like when you go and you buy a ticket and you think you can make money because all the odds are against you, and it's math. Casinos are based on math. It's most 99.99 you are a loser. There are exceptions where the people are making money, is because they find problems in this gambling thing. Now, let's continue with what we said. I said that margin account, try to be careful. And I speak about bankruptcy. I see some people, they go bankrupt. Even big, very, very big trader, like I always speak about this guy who is called Jesse Livermore. I think 4 times he was in a debt. But he makes his money very fast because he's a good trader. But still, he gets bankruptcy. It means people are asking money from him, like brokers, and he lost everything he has because he used margin, especially when you do selling short and the other stuff, dangerous things, and then you lose all your money. Okay? It's not you lose all your own money, but you lose the broker money. Let's say you buy $10,000, you buy a stock, a drug company, and this company is waiting for the approval of FDA. Okay? For this drug that it is making, or a vaccine, or whatever it is. And then FDA refused. They say no. So the Wall Street guys, what they do to this company? They kill it. They sell short everything. Every share that they see in the market, they sell short. In 1 hour, 2 hours, 3 hours, this company lose 90% of its money. The capitalization. Because capitalization, you common shares outstanding, you multiply by the price. The stock was 45, now it is $5 or 2 or 7 or so you lose all your money. Now you don't only lose your money 90%, let's say 10,000, 90%, you lose 9,000. And in your account, do you have only 1,000? No, because you have lost 9,000 from the margin because you bought $20,000. $10,000, it's not yours. Okay? So you lose $99,000. So what is left for you is 1,000. Then you lost 9,000 of the broker. So how much you are down? 8,000. Now the broker in the morning, they call you. This is called margin call. And they call you, oh man, please today give us our $8,000 that you lost. And they become very very harsh, because understand that in business, those businesses, banks or brokers, they are very hostile when you take their money. They don't care what happened to you. You sell your car, you sell your house, you sell your wife, you sell your kids. It doesn't matter for them. They ask you, man, bring us today the money. Or they put your case into the court, and and it will be a very big problem, and you go to bankruptcy, and you have a lawyer, and we have a lot of stuff like this. Okay? Tutorial me. Thank you very much for. I will answer your question. You are speaking about e-currencies. You mean the Bitcoin? Okay. Yes. I will answer your questions when I finish. Now, so all these, when you do mistakes and you continue to do mistakes, you are always scared. Now, you are always scared because all the things that I told you, and part of this, you don't know the risk. That's why most of the traders, they are always scared. They are not stable in their trading. Now, if you feel that you are scared, I suggest to you that you stop trading until you see, until you study, until you don't have to have all your money and you trade with it. So making money is when you understand how to trade. You understand the market. But it doesn't come like this, like a magical thing, buy here, sell here, and it's easy. No, it's not easy. So there is what we call a training in hand. You should train yourself and trade slowly with little money until a few months, 1 year, 2 years, 3 years, until you know. Now, when you know, your big problem is that you don't have money. That is the problem that you will have in the future. But before, you don't need money. A lot of money, it means to trade. You just trade what you have, or you just little of what you have, just until, because it's the same thing. And stop thinking about making money and you don't know how to trade. This is making you always scared and makes you stressed. Okay? So you get stressed. You always want to make money, but the money doesn't come. And you ask yourself, why? Why I am not making money? Why other people are making money? It's just because those people are advanced. And their techniques, their strategies are better than you. They know the market better than you. It doesn't mean that it is something magic that they just buy and they make money. No, it's because of their experience, because of the techniques they use, because of the strategies they use. Some strategies are more effective than others. Some techniques are more effective than others. Okay? It depends on the mood of the market. Sometimes the mood of the market is so bad, and you go and you become to trade, and you get angry against the market, and the market took your money, as they say, because the market doesn't take your money. It's you who give your money to the market. Okay? So that's the deal. And you see that the market has taken your money, so you want to revenge. Now, when you revenge, what do? You trade too much. And you begin to do crazy trading. You do, for example, you do earnings, you lose 20 or 30% of your money, and then $10,000, you lose 20%. So how much you have? 8,000. Now you go to another trade. You find earnings, you buy the stock. You say, okay, I need money. I need to make 20%, 30% to get my money back. And then you have another gap down. You lose 20 or 30%. If you continue like this, in a few trades, you will wipe out your account. And this is what happened to most of the people. It's just because you do crazy trading. Crazy. And when you are scared, this pushes you to trade more and more to get back your money, because they say, some people, they do this. There is a gap down, and I say, did you get out? You say, no. I say, after the gap down, the stock is still going down. When are you going to exit? Oh no, I don't exit. The market, I know the market will go back. But I ask the guy the question, how do you know? Does the market send you an email? Like an exchange. Let's say your stock is in NASDAQ. Exchange. The stock is listed there. I say, does the CEO of NASDAQ send you an email? They say, okay, hold for this stock. It will go up because he will buy, because there are billionaires, they buy this stock. How do you know? So since you don't know, you should exit. Now there is another idea that I saw before, but those people, I don't see them anymore. They told me, if I don't sell, I don't get the loss, so I'm staying. And one guy sent me an email like 1 year or 2 years ago. He bought the stock at 100. Now it is 25. And he told me, Karim, what do you think? I am holding this stock. It was 100, now it is 25. I know I have lost 75% of my money. Yes, I lost it. I say to him, why you didn't exit earlier? Why you stay? He told me the company has potential. It has a potential to do good in the future. I tell you, who tells you this? Is it the prospectus of the company? The company, they can't lie. Who will stop them from lying to you? Who? Analysts, they can't lie to you. They say hold the position. In the future, it is just, it is just a quarter or 2 or 3. The company has some problems, but it will solve the problems. Who tells you that this company will solve the problems? So these ideas that some people have in their mind, if they continue to have their ideas, they will wipe all their savings or all their money. They will wipe it out because of their stubbornness. If you don't understand the market, how it works, you will lose all your money. I have taught a person, I have told you this again, Kumar Subramanian. Yes, I will answer your question when I finish. So just wait for some minutes. Okay? I have told you about this story, but this is a true story. It means I taught someone. Okay? He has $500,000. Now this guy is making 3 figures. Okay? He has an excellent job. And he is excellent in saving money. So what did he do? He put like 25% of his money or 30% in his investment. So he is a good guy. It means I didn't see that many guys who are doing good like this one. He saves a lot. But the first mistake he has done is he relies on the bank to take care of his investment. But he chooses 2 stocks. He chooses Amazon and another stock. Another stock, I forgot the name. So he bought, it means through his money, he bought Amazon and another stock. But in all these years, now he told me that Amazon doubled. Let's say Amazon was 500, it goes to 1,000. So he doubled his money. So 250,000 becomes 500,000, which is excellent. Now, the other stock, the other company, it was going down. But the bank did not send him a report about this company. It means that this company is not doing well. The business of this company is not doing well. I don't know. Maybe he doesn't ask. He thought his idea about investing is as the other people have said to him, or he has read books. He say, okay, investing to make money, you buy a company and you hold the stock, that's it. Now this is not true. And he realized that he lost $250,000 because the company go bankrupt, and he lost it. He lost it all. Now, when I just spoke to him, I say, okay, I am teaching you trading. I am not teaching, you don't ask me about investing. But I told him investing is not the way you think. Investing is another thing. Okay? Second thing, did you check your bank how much money they take from your investing, and they take percentage like 2% or 3% a year, and when you invest, with the bank what they do to you. I give you this example because there are a lot of people, they don't know, this is what makes them lose a lot of money from the investment. They think that the bank will work in their favor because it is a bank, they trust them. But man, the bank, what the bank do? They want fees. They want to create fees. So, and I say to him, I will give you something to check. I told him, how much money did they take last paycheck? Let's say he is making a lot of money. I don't know what's this 25%, but it could be, let's say it could be $1,000. Each 1 month or paycheck or whatever is a salary or something. Let's say each month. Let's say each month they take 1,000 or 2,000, depending on how much the percentage. Okay? Let's say it is we take it as 4,000. Okay? But 4 by 12, it's not 3 figures, but just an example. Okay? I give you an example. Let's say he make 4,000. 25% is 1,000. Now the bank withdraw 1,000 from his account in a certain date each month. Now I ask him this: go to your investment and see how much they put in your investment. You will find that maybe they put 800 or 700. Now he was astonished. He said, what? He told me they took 2% or 30% of my money. I said, yes. But I don't know how much exactly. He was so mad. He told me, are you sure what you are talking about? I say, man, I'm not saying anything. Just go and see the fees. And when he went, he saw that they kill his money for many years, and he got mad and he sold everything and he opened a broker and he put all his money in his broker. And I told him, if you are going to invest, I can help you with my strategies. If you want to trade, be careful because you are just new. And I don't know what happened to him afterwards. Okay, so this is just examples of what's going on when you are a trader, when you are an investor, and it's all mixed up. And when you are scared, it means for a reason, because you are not just scared because just without anything you are scared. You are scared because you do mistakes, you do risky trade, or you gamble with your money. That's the big deal. Or you use the margin account, or it means a lot of stuff that I talk about. Okay, so thank you guys. I think I have explained too much and I finished. Now let's say what the people say. So Bobby 6 Killer say hi Kareem, hi Bobby, hi Nasa, hi Herman, hi Artkov, hello Fabian, hello Oliver Blair, hello Top Series. He say, hello Kareem, hope all is well. Thank you very much. Now Herman said, will company make money if stock price go up? I mean, how company get benefits from stock go up? Okay, this is a very good question. Now, your question, I can, Herman, your question is very interesting. I see if I can have the explanation. Yes. Please, guys, watch. I will just explain. I have explained this before, and I have an ebook about how a private company. So, in order to understand this, you should understand private and public company. Okay? Now, in private company, here is the company. Now, private, what does it mean? It means, let's say we have four guys or 4 institutions own this company. Each one is 25%. Now, for example, 25% is the first owner. The owner, it means one of the owners, shareholders. This is, let's say we can say Mark Zuckerberg for Facebook. Just an example. I will give you an example. Mark Zuckerberg, who is the CEO of Facebook. Just to understand what I'm saying. Now, Mark Zuckerberg, just an example, okay? It's not like this. So he has other shareholders. Let's say here we have an institution like a bank or something. It has 25%. He has another friend. He has 25%, and here another 25%. Another institution or another big investor or whatever. So this is when the company is private. Now, Mark Zuckerberg has the idea that he needs money. When you need money, you should, and you want to become bigger and bigger and bigger, you should go public with an IPO. So an IPO, what does it mean? The company is private, it becomes public, which is an IPO, initial public offering. It means this company offering shares to the public. So it will be like this in the future. Now this 25, all these, it could be like this here. All this here, it could be here, let's say 40% of the company. Now, the 60 per shares, this is a new shares. Now, new shares. This new shares, it's part of Facebook, but it is new. It means the value is zero. The value is zero, but they sell it to you. For example, the first day, they sell it at $45. So this $45, you multiply by millions of new shares. So all this money goes here. So this millions of shares, it goes to the company itself. And this millions of shares, where it goes? It goes to make Facebook great, as Trump said. Facebook bigger. It was a Facebook website. For example, the website of Facebook. It was small. But with all this money, they put all this money into this small website. And now Facebook is a big website. Okay? Now this big website needs money. Okay? It needs money. So, let's say now, all the shares of Facebook at the time, I think the first day, let's say it is $45. Now, $45. If $45, how much is the price of Facebook is now? Okay, let's give you an idea. Let's see. I'm just trying to see how much is Facebook now. Facebook is 276.40. Okay? So we take the past and you put from $45, it goes 276.40. Now, you ask me how the company profit. Now, the company profit from the price, let's say you are an owner. You bought the stock as $40, 45. Now it is 276. The money that you have as an owner of this company, from 45 it goes 276. You see that, for example, 2 and 2, we have 400. It means, let's say your money doubled 600 times. Okay? So this is your money 600 times. It means from 44. So you have made money. So Facebook company has gone from 45 to 276. It means it has made money. Now, if they need to get money from Facebook, what they do? They sell part of their shares. So they have it at 45, but now they sell it at 276. It means it's a lot of money. They can sell, for example, 10%. This sometimes happen in companies. Sometimes companies, they sell after a few years, when they have a lot of cash flow, they will buy back this 10%. Because the company is doing excellent. Okay? Is doing excellent. They want to make more control about the company. So this is how the company makes money. Now, there is another thing I want to show you guys about making money. Now, here is the thing, because the profits. Now, profits, we have two things. Now, we have two kind of dividends. Okay? This is the profits they get. So you, in the stock market, you have dividend. Okay? Now all this money that they took, it goes to the owners. Okay? The owners and the people who work for this company. They get compensations. They get profits. Not only dividend. Okay? So they get it not because they own shares, but because they are the executives of this company. They get free shares. Or they get free money from the profits. So that's why they can take money from the profits of the company, not just dividend. Dividend, it's us. We take only dividend. But the others, they can take profits. Now, I will explain this for you guys. Those guys who don't understand, I will just give you an example. Let's say you work for Facebook. You are a worker. Okay? You are a worker. Now, here in the stock market, you don't own any share of Facebook. You don't own any shares in the stock market. You don't own. Okay? Just an example. I said that you are a worker. Any kind of worker, okay? It's not executive or CEO, executives, workers, they get compensated. Now, Facebook, they give them money. Not from the stock itself, but from the profits of the company. You know, the earnings. This is what we call the earnings. Okay? Although you don't own any shares in the stock market, but they give you earnings, they give you some profits, and this happen for those people who have a 401k. Now you ask yourself, the company gives you money from where? You don't own any shares in that company that you work in. Let's say Facebook has 401k. They give you profits and they match with what you put, but they give you money from your profits. So profits are not the dividend that we get from stock market. Even the worker has no shares in the stock market, you are going to get earnings. And this is why the owners of the company are making a lot of money. Okay? So for example, Facebook, for example, Mark Zuckerberg, let's say he has, for example, let's say he has 27% of Facebook. Do you understand how much 27% of Facebook? Let's say it is 70 billion. He has 70 billion. It is his money. And the profits, if he each year, if he takes profits, he will take millions and millions of dollars if he wants to, because he is the owner. And this money, it's not because he has share or he has not. Although his workers have no money, but they can give them money, and this is called profit sharing. And maybe you, if you have a 401k, you are getting this money from your company, although you don't own any shares in the company. I think this is clear now for Herman. I think it's clear. Now, if you have Herman, if you have other questions about this, you can ask them now, or you can send me an email if you have some misconceptions or you have some trouble understanding. I will explain to you. It's very easy, but most of the people, they don't know that they think that the profits of the company is the same as dividend. They are not the same, but in the explanation, there is a big confusion in what the explanation. What is it? A dividend. Okay? And if you don't understand very well how the company works, what is the difference between a company profits and the dividend in stock market, you will get lost and you don't understand anything. But I'm trying to explain as much as I can. Basan, thank you very much, Basan, for coming back. Thank you very much. I know you are busy with your businesses. I know that. That's good. Hello from Texas. Oh, Texas, man, the barbecue and the cows and a lot of stuff there, man. Okay, haven't been here in lives, but I listened to it afterwards. Thank you very much, Basan, for following me. I know you are one of my oldest students here, but for many years, and we developed friendship. And this is very good for us and for everybody. Ashley Neal say, I know my problem is over leveraging for a fact. Yes, leveraging, it means you use margin account. And this, especially when you use it in forex, currency pairs, when you use it in options, and when we use it in futures. Guys, understand that there is a big leverage. A big leverage, it means it is as if you are borrowing a lot of money. Now, when the position is against you, you will be losing a lot of money because of that. Tutorial me say, good morning, teacher. Please talk about e-currencies, platforms. Thank you in advance, teacher. Now, e-currencies, we mean Bitcoin and the other thing. Now understand that if I tell you the truth, if you go to my video, I think this year or last year, I'm not. when Bitcoin goes down too much, it goes down to 3,500, I say there is a big trend forming. Now at that time, I didn't buy because I'm not interested in Bitcoin. So from that time, from 3,500, I make the video. I think it goes to 3,000 down to 3,100. If you have the chart from last year and this year, please check. I don't know if I can if I can find I will search if I can find. It is today. It is $24,000. Okay. Let's see if I can find the chart. Okay, I will show you now the chart if it goes good. Okay, guys, look at the chart. Now, this is the old stuff when Bitcoin goes to 19,000. This is the very high, and then it goes down here 3,400. Yes, it is. I think here 1,000. Yes, it could be here that I make a video. It's in December. Here, let's say here, or in January. December. It means to December 2018 to January 2019. January, February last year. Not this year. Now here I make a video where I see that the stock has been going up. I see this because I don't see all this, but it has gone here to 12,000, then it goes to 6,000 or 5,000, then now it's 24,000. So understand, and the volume 34 billion, and the market cap is $445 billion. Okay, and this is the price, as you can see, 23,963. Now, what is the thing about Bitcoin? So understand that this is a new thing. I think from 2008, I have made videos about Bitcoin, about the history. If you want to go to, there are some history. I make them in some videos. So now it is 24,000 something. But investing or trading, you should have a conviction, or you are convinced that this can go up, and you buy on time. Now you tell me, now are you going to buy now? Because people, they say, okay, it can go to 100. Yes, it can go 100. But what if from 24,000 it goes to 3,000? Okay? So it's a big deal. Because, listen, when you miss something, for me, it's very hard. It's very hard right now about Bitcoin. And you see people who are, some people, they have made a lot of money. Some people bought at 8,000, some at 3,500, some people at 7,000, 15,000, 20,000 depends. And see, Bitcoin is very fast. You can make money, a lot of money very fast, but you can lose a lot of money very fast also. Okay? And I can say nothing. So if you want to trade, you can trade like buy long or sell short. You can do that. It's like a stock. But try to see the bid and the ask, because it might be wide. And this is some people, they trade it like they trade forex, currency pairs, like they trade options, like they trade the futures. It's the same. It's the same thing. It's volatile, and it depends on you. Okay. Now, hope tutorial you get some information. You can text me tutorial later, or we can discuss this more. Kumar Submariyam, last Friday, 18th December, we are at 21 profits. This profits since when? Which date? I think it's 1 month. But understand that we are looking for 1 year. We are not always looking for each month you make like this. No, it's the whole account. I think we begin it 1 month ago. Now at the beginning of the year, we have made like 6 months or 7 months. We have made 40%, and you can check that. You can go and you check the old account. Now this account we begin like a month ago. We begin it fresh, and we are at 21.78% in this month. But understand that this is not 1 month by month. We can continue. It can go up, it can go down, depending on what I buy, what I sell, until we stop. Okay? Kumar said yes. NASA, what do you think of RMB IPO? Oh yes. Understand RMB, because I don't see the news. It just come to me like this. RMB and other stocks. You know, these sometimes they are famous companies, and the people, they weigh them too much. Now let's go to the chart. Let's see. Okay. Let's check. Okay, look. Okay, guys, look at the chart. Now, RMB here, the IPO, it means the company get listed on the 10 December. Okay? So, it opens 146, it goes to 165, and then it go down to 124. This is the thing. Then the next day, it goes down. Third day, it goes down. Fourth day, it goes down. Now, this is the 5th day. Okay? 5th day. It means in this week we have, so here, we have Thursday. Now, Thursday and Friday, they go down. And then, Monday, Tuesday, they go down. And then they go up and up and up. Now, RMB is now 157. Now, for the people who are following my strategies, they know when to buy and when to sell. But understand that IPOs, you can make a lot of money and you can lose a lot of money. They are very fast. So before you do the trade, you should have strategies when you buy and when you sell if it doesn't work. And this is, I always tell you about this. Okay? I always, guys, tell you about this. Because my strategies, I just know, because of the strategies I follow, it's something that you can see in the chart. So since I am a chartist, I am using technical analysis, but I'm not using that like all the people, technical analysis, trend lines, and what is it called? The moving averages and the other stuff and the indicators. I don't use all of that. Okay, I have my own strategies. So if I buy a stock, if it doesn't work, I sell it. It's not because it's Airbnb or it is Uber or Lyft or Facebook or Apple or any other stock, new or old. But understand that IPOs are very, very volatile, especially stocks, companies that are very known. Okay? Now, Facebook, when it comes, it's very volatile. Twitter, very. All the companies are very volatile when they are like new. So, if you are going to buy or to sell, if you are my student, you can send me an email. You say, Kareem, I am interested in this stock. When should I buy? So you already know because you follow my strategies. But if sometimes you get a trouble when to buy, there are a lot of new companies that get listed. So try for me, if I want to trade this, I can trade any company. But when it is a big company, the potential is very, very big. The potential is very, very big. I have told you about, before, I always give you this example of Square. I don't know Square, how much it is now. Yes, I will show you, guys. So, guys, this is Square. Now, I give you just this example to understand. Square is a way to pay. And there is like a small square device. You can put it in your cell phone and you can accept payments if you are outside in the street. Let's say you sell a car and someone has you ask him, okay, don't give me cash. Let's say your car is expensive, 10,000 or 20,000, and maybe you get robbed or you get killed or something like that. So you ask this guy, okay, I have, you get the car and you do, you pay by credit card, and I have Square. So see this. When it begins, I think the chart is not full because I think it was only $10. I think there is something else. Maybe there is a split or there is a reverse split, because at that time I have made a video before. I think it was $10. It has gone to 100. So the chart. But understand here, for example, it was 32. Now it is 235. 32 in end of March this year. This is the big trend that I always speak about this year, and that's why I told you we have made a lot of money. Okay? But understand, it was 32 or 39, or let's say 40. Now it is 200. So, 40 is like 500. It's like 600%. But understand that this stock, you see here, we have a lot of gap up here, and we have another gap up here. So, and it continues to go up. So this is, I told you why IPOs sometimes they are very good investment or trading if you are trading, because here you trade and some people who know and who want to invest. But this here, when you see this one, is very simple to know. This is just the coronavirus downtrend. As you can see here it is. All the stocks go down, and this is the crash that happened. Not the crash, the correction that happened in the stock market. And then the stock market goes up. So we have bought all here. But I didn't buy square. Because here is the deal. Guys, I always speak about this. You will never catch the best stocks in the market. Always. Because in order to do that, you should know all the good stocks or the big stocks or the well-known, and you put them in the chart and you follow them daily. For me, if I want to buy, I want to follow them daily because I need to enter. Now this helps me to enter. It means to buy the stock on time. Okay? According to my strategies. But understand that whatever money you have, you can't get all these winners all at the same time. You can find a winner, yes. But you don't find all the winners. Because all the winners could be thousands of stocks. Because when the market moves so good like this year, there are thousands and thousands of stocks that do excellent. But the percentage of profits are different. One you can make 50%, one you make 200%, one you make 40%, one you make 10%. It depends on the stocks. Okay? So this is what I'm speaking about. So I have another question from Kumar. Whether your portfolio 100% invested since 1st of January, including February 2022, to how much was drawdown during the market sell-off? Okay. In the sell-off, since you are going, we change the strategy. When the market is going down, we sell short, and so we don't I don't know. I think we make 10%, I think 10% down or something like that. Because we have been making money from selling short. But selling short, I'm not going to put all my money into selling short because it is a dangerous thing. But when we have this month, you said, for example, whether your portfolio invested. Yes, it is invested 100%. But understand that I think in September or we get a problem with this software, that it is the trading software, when we have the splits and the software took our money from Apple and Tesla. And that's why I stop. When we reach, I think, 140%, I stop it and I reset it because they told me they can't fix it. There is a problem with I have explained many times for my students. So if you want to see what is the problem and the software, I will show it to you. It's just because of the split. Now, I am not. Maybe you are thinking that I am like the other guys who they hold when there is a correction. No, I don't hold. If I tell you that I have sold all my shares on the I think 21st February. I know you don't believe me. But Kumar, if you want to check why I sold all my shares, I think on the 21st of February, I know you will say to me, it's impossible. How do you know? Now I explained why. Because for me, when I see a danger coming, I can feel it. It's not I see it, but I just sell. If I am wrong, I will buy again. But at the time, I was correct. I can show you where exactly I sold my shares, just to make sure. Just to make sure you understand. At least if you want a proof, you say, Karim, how can you give me a proof? I can give you a proof, because when I trade, I show. So, okay. Now, look here. In this day, 21st February, in this red candlestick before the gap down, I sold almost all my stocks. I think I sold 80% of my stocks, and I left one stock or two, I think two stocks that were good. When there is a gap down, I sold them. So I didn't lose that much from my account. And then here, in 1 week or 1 week and a half, I sell short with inverted ETFs and so. And then here I begin to buy. Now all this information I was buying here. It means I was in the market. But if you tell me, Karim, how did you sell in the 21st? What is the thing that you see? Now this is a secret of trader I told only to my students. Okay? I told only to my students, so I don't, generally I don't tell this kind of information on YouTube, because it's people who are paying me to give them this information. Okay? Tutorial, thank you very much. Oliver Blair, can we look for mergers? Understand, see. Oliver Blair, when you are trading, whatever is the thing, earnings, mergers, or upgrade or downgrade, everything is a trade. Okay? Everything is a trade. It doesn't mean that one company that merges with another company, that you buy the stock and you make money. This is impossible. It can go up, it can go down. So, Oliver Blair, if you are thinking that you know the mergers, you see a merger between a company and another company, and you think that you are sure to make money, you are wrong. So what I ask you to do is follow the charts. Follow how I enter two stocks without knowing. For example, for me, I don't care if it is merger or it is something else or whatever. I don't care. I see the chart and I buy because of the chart. I don't buy because of the news that the company has. So if you are going to trade, follow the chart. If you are to invest for 10 years, 20 years, follow fundamentals and use the chart to enter. For example, you say to me, oh, Karim, I want to invest in this company. I can show you how to invest, how to buy. It means when to buy. I can show you. And I can show you the strategy that I have for myself, how to invest. Okay? I have in ebooks, and when someone asks me, one of my students, I try to explain to them how this works. Okay? Kumar, how you avoided the coronavirus crash? Aha! Aha! You want me? I told you I will not give you an answer. Okay. This is kind of what we call speculation. Speculation is when you bet on a stock because of some information. And this is part of trading. This doesn't you don't need a chart to speculate. Okay? I have another strategy, coronavirus stocks for this year. I call them, I don't know, but I call them coronavirus stocks. A lot of gap ups we have this year when we bought the stocks. Some stocks we call them, we got gap ups, not gap downs. We got gap ups this year. Why? It's just because of speculation. Now, I sold my regular stocks because of the speculation. I see something because of what I know about the mood of the market. But I would never be sure 100%. I would never be sure. Let's say you are waiting for FDA approval of Pfizer or Moderna or other companies, and you buy and you just wait. Maybe there's good news, you have a gap up. That's it. It means you base your information on a speculation, on information about the market, about the stock. This is a kind of trading, is called speculation. But you don't need a chart for that. You don't need a chart. Tutorial say echo. Kumar said thank you very much. Thank you very much, Kumar, for your questions, and they were very interesting questions. So guys, thank you very much for being here. And we are the market. I don't know what will be going on. Last week I have explained to you what we expect in December, and it could be a crash, it could be a bull market, it could be crash, it could be correction, it could be anything. So just, if you want to trade the trade, if you are scared, just get out of the market if you are scared, or get some training in order not to be scared. Okay, so guys, thank you very much for being here and for asking questions. If you need me, guys, for those who don't know, you can go to my Facebook. Let me give you my Facebook. Maybe someone of you wants to contact me by Facebook, which is easier. Okay, so I will put my profile. You can send me a message, which is easier. Kumar said, do you have Twitter to follow? I have Twitter, but I stopped a long time ago. I don't do, because I have a Facebook page and some groups, but I am not very active. I'm telling you the truth. I am not very active. I am always with my students and with YouTube, Facebook little bit, so I'm not very active. But you can go to my website and check my Facebook. Okay, Djellala.net is my website. You can find my my Facebook, my YouTube, my other stuff. YouTube you are in, you know, and you can send me an email. It's always in my always in my videos. istockmoney@yahoo.com. Okay. Facebook, why? Because some of my students sometimes ask me when it is an urgent question. Okay, they say, Kareem, there is this, what do you think? So I respond to them. It's for free. I don't. But if the guy is my student, now if you are not my student, you can ask me general thing. Yes, I can spend, but for training or give you something, it's not. So I just, some people I explain things that they don't know, but it is general things that they can't understand. I will explain to them, but it's not related to I show you where to buy, where to sell, or I show you my strategies, which is not. You should be my student to get that service, which is a paid thing. Okay, so guys, thank you very much for watching, and hope you have a good weekend. So we are going this week to Christmas, so happy Christmas before we go. And if you don't believe in Christmas, you believe in holidays, so happy holidays, because vacations of students and teachers and all are having a good time. So happy Christmas and have nice weekend and nice holidays. Thank you very much.